So look, welcome everyone today. It gives me pleasure to tell you what Neometals is about. The usual speed reading as we're listed on the ASX. So I guess, look, in short, we are project developers listed in Australia, but headquartered in Western Australia. Essentially, we've developed projects, and our current projects are centred around a once-in-a-generation megatrend, and that is the move to the electrification of transport and stationary energy storage. So what we've got absolute certainty of the number of lithium-ion mega factories being built. The predominant area outside of China is in Europe, and we can therefore forecast accurately what the impact on certain battery materials is going to be. Historically, for the last 10 years, we've been in lithium and developed the world's second largest hard rock lithium mine, which we sold out of this year and kept some offtake. We did acquire a nickel asset early last year and have built that up with our 11th resource coming out today to be about 130,000 nickel metal tonnes. And in terms of cobalt, well, we developed a lithium battery recycling project to predominantly capture it. So it's established in 2002. We've got a team of about 20 here, about 5 in a research lab in Montreal. As I said, we developed Mt Marion. It's still running. Most of the lithium mines have turned off because the spodumene prices are a bit rough. We made about 200 off a 3 million outlay, returned 45 million back to shareholders. We've got 170 million in cash and investments. So essentially, I'll run you through, what we see as the opportunities and our solution to sort of meet those opportunities. So following on from the earlier image there, we can see the volume of batteries that will be delivered into the market, predominantly for EVs and for a lesser percentage, the consumer electronics. So we can see that growing asymptotically, and then what we're seeing is that, what we're even more convinced about is that these batteries wear out. Your phones are worn out in 2 or 3 years, your laptops in sort of 5 years. The cars, statistically, they say 8 to 10, but if you're using them heavily, like in taxis, they're starting to come back in 2 and 3 years. So we can see the volumes of batteries available for recycling. So our solution, we started in 2006. It's taken us a couple of years. We've blown up a few things. That's why they call it research and development. But we've come up with a process to, one, shred the batteries and make them safe to move around and move to a centralised processing facility. What we can see in the photo there is a 2 tonne an hour shredding plant that is owned by Neometals. That's currently in the process of being relocated to Germany. So we've done a pilot plant. We started in February. We'll finish that in a couple of weeks' time. We put our cobalt results out, which is almost the last thing to come out, and we were getting 98% recovery into 99% purity. So that's going really, really well. We've been able to attract SMS Group, which is a multi-billion-dollar German company, 140 years old, 13,500 employees in 95 sites around the world. We'll put the front end of their plant at headquarters in Dusseldorf, and we'll put the refining plant in Vienna. Ultimately, the first plant will be in Germany to service the German industry. We're currently shredding batteries for German car makers, consumer electronics giants and cell makers. So really what we've done is a joint venture where they can have 50%, but they've got to build them, they've got to operate them, and they've got to procure debt financing. As part of the sale of Mt Marion, we retained an offtake for about 57,000 tonnes of SC6 product annually, which is enough for about 10,000 tonnes of lithium hydroxide, more or less. But the lithium market is in the toilet. Some guys call it the valley of disappointment. I saw a graph the other day. I'm not sure how you accurately describe that in a graph, but I can certainly tell you that most of the lithium investors are indeed in a valley of disappointment. But like all things, that'll be only temporary. Our supply response from Australia was too strong. As a consequence, a number of mines have shut down or are in the process of shutting down. And we've got the battery plants starting to ramp up, but they don't really start hitting their straps until 2023-24. So what we can see sort of mid-decade emerging is a massive deficit that will be permanent. You know, we all hear about the brine producers, but the brine producers did not add one substantial tonne of extra capacity in the last boom. It all came from the Aussie hard rock miners and the Chinese lithium converters. In fact, as a percentage of production, the brine producers have gone down. They have, you know, it's an oligopoly, they've got perfect vision, but still they couldn't meet the market, and they're not likely to. I did see in Chile they've got a few issues, as well as Argentina. So our solution is to find somewhere where we can be first mover, and so we are moving to an MOU with India's third largest power trader. They are also in the process of putting in 21,000 EV charging stations through the country. The parent is a very large civil construction company. So essentially, you know, the Mt Marion ore is already going into the highest quality lithium hydroxide applications and is pre-qualified. So essentially, this plant is fully engineered, with test work's done. We're just re-quoting it to put it in India, where you've got 1/5 of the world's population with absolutely zero domestic lithium production, and a government that wants to change that very, very quickly. We've also got the world's second highest grade hard rock titanium vanadium deposit. We've spent about $30 million on that project. It is enormous, 280 million tonnes of ore in the first 90 vertical metres. It's been a bit of a challenge to get out. The vanadium comes out easy, but vanadium's an ugly market. I once wrote a paper at the School of Mines called Vanadium Where Angels Fear to Tread. Unfortunately, the volatility over the last couple of years has proved that true. So in essence, 75% of the value of the ore body is in titanium. Titanium is not a sexy mineral. It grows at 2%, has grown at 2% demand for the last 50 years. One of the good things is that we are running out of high quality titanium feedstocks in the world. There will be a deficit for sulfate ilmenite emerging around 2022, and we literally cannot see where that can be filled. So that's how we're timing the that's the opportunity, and then how our solution to that is essentially to partner with the Chinese government. IMUMR is owned by the China Geological Survey. They act like JOGMEC in Japan. They build up these projects and then they palm them off to large Japanese companies to put into production. Essentially, we'll finish the pilot plant next month making high purity titanium chemicals. Essentially what we're going to do is replace sulfate ilmenite with a higher purity intermediate product, which will eliminate the iron sulfate waste in China. It's a government imperative to remove the waste. Their alternative is to spend hundreds of billions of dollars converting sulfate pigment plants to chloride pigment plants, which I don't think they really want to do. So we're funding the pilot plant, they'll fund the demonstration plant, we'll then co-fund the engineering studies and consider a 50-50 joint venture. Essentially, the joint venture will have the rights to mine at Barrambie. It will not own it. It'll refund us $30 million in development and pay us a 5% royalty. I guess it's part of our consistent strategy in terms of acquiring projects, building them up, and then bringing in big multi-billion-dollar companies to take a lot of the financial and operating risks that I'm not too keen to take. And just for Leo's amusement, we bought a lithium project last year, Mount Edwards, which is down at Widgie-Maltha. We've got a little bit of a fly-through I can run through quickly. It's located about 40 kilometres southwest of Kambalda, in the Eastern Goldfields region of Western Australia. Widgie-Maltha is the second highest producing belt after the Kambalda belt. Produced about $35 billion worth of nickel. We have probably 3/4 of the tenure down there. We've got 4 historic Western mining mines, 26 North, 132 North. It'll come up in a second. Can't quite remember the other ones. Armstrong and... can't remember. But look, anyway, it's a fantastically located project. It's on the grid power. It's on the national highway, it's on the railway line, and we've got gas and scheme water. So fantastic belt, 45 strike kilometres. We've got 11 JORC resources. We've got 10 areas of mineralisation with no resource on them. We've got 51 targets. We've been doing a bit of exploration down the southern end on ground adjoining Mincor's Cassini discovery, and we hope to make a new discovery soon. So just gave a little bit of a fly through. I'm running short on time. Anyway, this is the drum. I think, you know, what we offer our shareholders is security. We've got a cash backing in excess of our market cap, 4 fantastic projects, fantastic people, and multiple opportunities for re-ratings. I mean, we've got mature projects that have got several crystallising events for re-rating of the value. So thank you very much for your attention, and any questions, come and see me later.